What are you looking for, and what sort of reassurances are you hoping for from the Fed this week?
Sure. So actually taking a step back, I agree with Steve, and we agree with Steve. From an economist point of view, it doesn't really matter whether it's 50 or 25. What matters is interest rates are coming down. That's a first point. We are quite firmly actually in the 25 basis point camp. What will be probably even more important than the actual decision, or could be more important, is the details, namely around the dot plots and namely around the SEPs. In particular, whether growth will be changed, projection for growth, inflation, and in particular for unemployment.
You're just saying you don't see the case necessarily for a 50 basis point rate reduction. So if one were to happen, what would your reaction be?
So sure, we actually strongly overweight in the fixed income space on sovereign bonds, so on the treasuries. We are above benchmark in maturity terms, so that would profit us in particular on the fixed income side, because we have a strong overweight in treasuries.
Jero, fascinating hearing your thoughts already. I guess one of the sensible questions to ask is, okay, we get 25 or 50. Again, we'll leave that one dangling there. Who's it going to benefit? Because most Americans are not that interest rate sensitive when it comes to their biggest source of debt, which is mortgage debt. We know that revolving credit is priced at an extraordinarily high level and will only change at the margin if we get 25 or 50. Most American corporates took advantage of the incredibly cheap money we saw at the start of COVID to refinance as well. So I guess I'm asking about the sensitivity of America, of Americans, to the interest rate scenario. How much difference will it make to their lives and to corporate lives as well?
I think in very concrete terms, for the actual American, it doesn't mean much. What matters is more like what happens with oil prices at the gas stations. Oil prices have come down. That is something very visible, very instantaneous, that is visible to all U.S. consumers. But the sector that is, I guess, most affected to interest rate changes is the real estate sector. In particular, here on commercial real estate, we might see some improvement. But again, whether it's 50 or 25, we are firmly in the 25 basis point camp. It doesn't matter that much. What really matters is the signaling that will be given through the dot plots, through the SEPs, the wording that Powell uses, how he characterizes the current situation. The U.S. economy remains quite strong. The labor market has been weak in July, but improved quite a bit actually in August. What the characterization is by Powell on that. Also on financial market conditions, which remain very benign. Also on the slots report, which actually showed, the last one, that financial conditions remain quite tight. That would be an argument for 50, but nevertheless, still, we think the labor market is fine, consumer spending is fine, payrolls went up, wage growth went up. That's actually good for household spending overall. The jobless claims do not show some crashing in the labor market. So overall, we are quite confident that it will be 25. And the last point